Traders, Anthony here. Bitcoin on the 1 hour chart at the moment. Now, I posted a video recently down in here and we were talking about this trade. We got a fill. This was the idea and we've hit 7R. So if you're in this trade, you want to close now, because what I'm doing is I'm looking for another entry point, and so I'll delete everything that I've got on here and we'll start again with this video. Going to go out to the daily because I want to share with you my strategy, how I go about basically looking for ideas and the chart. We've got these highs over here on the daily time frame. This is a key level, big level of resistance, and this has spiked through it. And we've also got these highs here. So what's going on at the moment is smart money or big guns are hitting liquidity above these levels here. They're taking out these buy stops that are resting above here and here with a vengeance. So you can see how the market's reacted around these levels here. So you want to be a little bit careful. It's overextended. We don't see any red candles through here. So I would be a little bit careful with this. Let's just mark up this daily bullish order block. We'll call it support, just to keep things simple. That's where bigger players here accumulated, and this is where they're unloading up in here. So big resistance, guys. We're trading right into it, and I mean, my bias is definitely bullish. And we're reaching for these highs. We could mark up these levels here as potential targets. I'll grab the high of this one and we'll mark them up as targets, and then we'll go down the lower time frame. So I'm going to go for these levels here, and I mean, on the lower time frame this will spread out a little bit. They won't be so close together. So let's just do that. All right, so I've got 3 specific targets. This one, the high of these candles and the high of this wick. This range up in here would be definitely a liquidity target for smart money. So we could color that red if you like. Let's go down and select that. Done. All right, here we go. Yeah, I mean, same thing with this. We could color that red as well, but you get the picture. All right. Go down to the 4H, and I have a rule of thumb with my trading. I'm always looking for these price swings. For example, swing low, swing high, retrace. Swing low, swing high. We could take it from, I'll take it from this red candle. This is a bullish order block, so I'll just take it from swing low to swing high. And my rules of engagement is this. I'm looking for a discount. I'll grab the fib retrace, swing low to swing high on the fib, and 50% of the fib is basically, that's my bottom line. It's got to trade through that for me to get involved. Under here is a discount. This is 50% of this price swing, and the 61.8 is an ideal target for an entry. All right, so that's that price swing, and then if we do the same thing here, and I grab it from the low of this bullish order block to the high, 50% comes in here. So I'll be looking for a potential buy, somewhere around there, like that. Stop loss, well, you could go. There's a few things. I'll come back to that. Let's just have a look at some potential targets. Yeah, well, okay. Here's the thing. Our highs over here would be a thing, but I want to go a bit further than that. And what I've done with the Fibonacci is I've set up a -50 and a -100, and the thinking behind that is this: A, B, C, D measured move brings me to, well, since we've got resistance sitting here, this is a big level, guys. We hit all-time highs here, and it's definitely going to react around that. So I'm going to go slightly under that for a target, but the 50 all through to the 100, see, we don't have data to the left on the chart. This minus 100 is a target, and I'm looking at, yeah, well, that's heading into the 78,000, okay, $78,000 price level here. This 78,000 handle. All right, slightly under 78. That's not a bad target. Now, there's a couple of ways we can approach this. I mean, that's a 3.9R, but I'm going to reduce this stop. And then we've got a 4.5R here. You could take partials along the way, and you could build your position along the way as well. Anyway, what we'll do now is just going to have a look at what I'm looking for down in here. And I'll show you, if you're in front of the chart, I mean, look, you can speculate and run with this strategy on the pullback into the 61 or 50 to 61.8 fib. That's fine. Stop loss, well, I'd go below this red candle body, something like that. But you can get a little bit more precise with this. Have a look at these candles here. This green candle where it rallied off, okay, it's expanded out from this balance area. Pick the candle high on the left, candle low on the right, and what we have here is an imbalance on the 4-hour time frame. The market will look for two things. It needs liquidity to function. There's no liquidity above here. Well, there could be, actually. There's liquidity at that high, but you know, more often than not, it's going to pull back down into here and take out these sell stops under, you know, traders going long here. It'll take those out, and that will give smart money enough liquidity then to pair their orders long. Okay, so bigger players, they don't buy up here. I guess that's what I'm saying. They buy at a discount. They accumulated down here. They'll unload up here, and you know, they'll reaccumulate on a pullback. So let's just grab, what are we doing here? This is a liquidity imbalance, I should say, sorry. We've got this bullish imbalance here, along with, see this green candle here? Okay, so we've got these two levels that make up the whole range through here, a liquidity void. Actually, I'll just mark that up a little bit more precise. Yeah, pick up the high of that candle. So we've got this liquidity void through here. It's one-sided, bullish. Okay, so I'm thinking that that would be a target for bigger players to hit the stops resting under here and the market to rebalance. So you could look possibly to pull your entry point down a little further. All right, something like that, maybe slightly before the midway point of this imbalance here. Right now, you can set your stop loss under these imbalances. If this is a bullish trend and it continues, more often than not, it won't pull back further than hitting these levels. More often than not. I mean, it can. Of course it can. But, you know, like, I mean, where do you want to go with your risk? See, here we've got a 5.5R outcome. And, you know, if you stretch that out, it reduces it. But, you know, it gives you more of an opportunity to stay in the market in case they decide to get aggressive. So, you know, it's up to you. There's two levels here where that are valid for a stop loss. Now, I might just leave mine down in here, 3.99R. So that's one way to speculate, right, is to set a limit order and let it go. Set and forget, and we're done. Now, to get involved with this, if you're in front of the chart, it's a different story. So let's just go down quickly to a 15-minute and just show you this. We'll go down to, let's all right, have a look at this price action here. Even a 30-minute, but okay, 15-minute. It ranges, they hit stops, and this is where they load up, and it starts to move. Okay, now what you want to do then is look for this range. Just keeping this really simple, you want the break and retest and fail of the range high. So there's a range, stop hunt, it trades up. This high is what I'm interested in. And on the 15-minute time frame, you want to wait for where this starts to, well, back in here, where you see higher highs and higher lows. Okay, so we've got a lower high here, but, essentially you're looking for this trend to kick in, especially above the range. So if that's if that's the strategy, you could wait for this on the 15-minute time frame. This is our entry point here. This is our point of interest. Okay, wait for this to trend down. So lower highs, lower lows. At some stage it will trend sideways. And it's just exactly the same thing, guys. We break. Okay, price action. However it works out, but, and then we get a bit of a range going on. Watch for the volatility after the range. They hit stops. We get the displacement, and then we're off. Okay, so you can wait for this. If it's trading back down into this level, and you're in front of the chart, I would be waiting for this price action. Be careful, because more often than not, they'll push it up first to draw more buyers in, creating more stops under here. Then they hit those stops, and they're off, okay? That's my take, guys, on Bitcoin. I'm interested in getting involved with this right now. I like what I'm seeing on the chart. Now, if you get an entry here, and this starts to trend higher, well, you could place your stop loss below the previous low. And I mean, if you want to follow it up, if you want to trail your stop loss, then look, the easy way to do it is it starts trending, and you're looking at higher highs, higher lows. Well, the way to trail your stop loss would be then you place your stop loss as it moves up, as it breaks and retests and continues on. Your stop loss goes under the previous low. And then at some stage, it'll turn around and take you out if you want to trail your stop loss. That's my take on Bitcoin. I'd love to hear your thoughts on this. Definitely comment below. That would be awesome. With that, I hope you have a fantastic day, safe trading, and we'll see you in the next one.